Hope everyone's enjoying their weekend. It's raining over here, so I decided to take some time to look at ABIO and go over it. Um, so there's a lot of lessons to learn about this one, especially in the filings, but I know a lot of people don't understand the filings, so I'm gonna make it as simple as possible. Whenever a ticker pops up on my scanner and it does have some good news, I typically read the news, check to see how bullish it is, and then after that, I want to see if there's any dilution going on. Um, Within this company. So the first thing that I do, I go to this section right here and I look at the most recent offerings, right? So the S3 is when they register the offering, right? When they basically ask the SEC and say, hey, we want to raise some money and this is how much we want to raise. They get approved and they filed an S3. Now, the S3 gives you some information as far as like how much you're trying to raise, how much they pay to file for this, right? There is a fee and some other stuff whenever it gets updated. Once they put an A right next to it, it just means that they amended it, and you can see that they added some stuff right here, but not much has changed. Okay, they're trying to raise $75 million, but once you see that 424B, that means they have raised some capital by the offering. So let's take a look at this one right here, and I did plot it on the chart. I kind of want to show you a couple things. So the main thing that I look at is I scroll down and I look at section S4 right here. So on the section S4 will tell you what type of offering it is. So the offering is at the market offering. Okay, there's no specific price or anything like that. Sometimes, uh, but right here it will tell you the shares outstanding after the offering. You can see right here. In this one, I do believe they gave you the offering price. Here you go. So they gave you the offering price. Sometimes, whenever it's at the market, they don't give it to you, but it's always good to see the number right here. And I think the most important part of this is this section right here because this will dictate the future of the stock price. If you can see right here, they have options to be exercised, and this is how many. They tell you at what price, right? And you can see that the price is always higher than what the actual stock is trading at. So the stock was trading around $1.25, and the exercise price is $5.14. And then you have the warrants. The warrants are one of the biggest factors when it comes to the price action and how it's manipulated as well. So on this one they have, and it's the biggest one most of the time. So this one is 3.6 million warrants to be exercised at $8.38. They have some units and other stuff in this one, but let's go to that date, right? Let's go to that date. You can see that the warrants were to be exercised at $8.26. So this is the date where they announced the offering, and then you know how I told you that the warrants and all that stuff they take how the price action will be in the future. If you have this plotted and you save it for next time, and let's say this ticker pops up on scanners and you're seeing it has maybe some fluff news or something like that, the reason why I like shorting so much is because there is information to dictate the price and how low it's going to go and where is it going to top out most of the time. Now, when you're going long, you really don't know the potential, how far the stock is going to go. It doesn't tell you. The filings doesn't tell you how far it's going to go or anything like that. But when you're shorting, you understand where the heavy resistance is, where most of the supply from the filings is, and when are they going to start dumping their shares. So this is the first offering, right? It was consolidating, and then it had some volume and spiked up here. Now, even though it says $36 or whatnot in this area, it's not the actual price since they did reverse stock split, so it's not going to show you the actual price. but I do bet you that once it spiked, those warrants were converted, okay, and they dumped it. They dumped those shares. This huge drop right here is that they failed one of their clinical trials. So that's to be expected. A lot of times these bio companies, when they fail their clinical trials, it gaps down, 30 to even 80%. So there's that. So this dilution already covers on this spike, right, in this whole price action. Now let's go to the second one. Okay, the second one will be January 25th, 2019. That's not so long ago. You go to the S4. Uh, no, they put it on the S5. Okay, you go to the section 5, and you can see it tells you after the offering how many shares are to be outstanding. They tell you all that information, and then down here they give you the options to be exercised, 604,000. They give you the warrants to be exercised, which is the biggest factor, 2.6 million at $7.07. Um, so they give you all this information, and we're gonna go into the second offering right here. Okay, now this is really important. This section is really important because when they did this offering, the stock was trading under a dollar, even under 50 cents. So you can see the stock was trading at 42 cents. Now, why do you think that, the exercisable prices are so high? The reason why they do this on purpose, and it's so easy for them to make money because they know they have to do a reverse stock split. If the stock price was at 42 cents and the exercise price was at 707, well, they knew that they had to do a reverse stock split later on the line, pretty shortly, I'm assuming, because they did do it really short from this period. And after they do the reverse stock split, the stock automatically looks as if it's at $7. So they did the offering right here, okay, and it spiked, okay, it spiked. So it's to uh, it was at 40 cents, so I don't think they could have exercised those warrants here because it didn't gap up that much. And you can go by measuring it, okay? If this was trading at 40 cents and let's say it gapped up 144%, that's still not enough for the price to get to $7. So these warrants are still live, right? They're still active. Um, and then you have another offering, which it was very, very recent, and we can go into this third offering, okay, third and final offering. They raised 580,000, and if we go to this section down here, okay, it's going to tell you the shares outstanding after this offering, okay, and it's going to tell you a lot more warrants, okay, it's going to tell you more warrants, okay, exercise price at 628, options exercise at 483, all that good stuff, okay. Also this right here, I know I didn't mention it, kind of skipped over it, but this is also kind of important. These are basically awarding plans for employees, okay. So employees can also exercise, like board of directors and things like that. They could also exercise options to sell into market. And so this is the final offering, right? Remember, it's still at 40 cents or something like that, or even less, at 30 cents. And so it comes down and they do the reverse stock split. Now remember, there's about 19 million shares and they do the reverse stock split of 18 to 1. So then now the float is, let me look at my notes. The float is roughly about 1 million, a little bit over 1 million, right? Shares outstanding is this much, so not much difference. Let's just go by shares outstanding, and they do the reverse stock split, and then after that, the stock is, at $5. Remember, the warrants are still at $6.28 and also at 707, right? So you have about 5 million, okay, to be exercised around, you know, 5 million warrants to be exercised at 628 and then also at 7. So then we're going to go into the intraday, the first day that they announced the positive phase 2 data, and this stock is not up this much because the news is so great. It's only phase 2. They still have to go through phase 3, get FDA application in, see if they get approved or denied, and then after that they can start basically the production of this drug. So in this area right here, I plotted the 625 level, right? When they announced the news, it gapped up, got halted, and then after that, once I knew, like all the research and stuff like that, I typically take about 10 minutes to do all this research. I started counting or keeping track of the volume because I knew that there was a bunch of warrants at this level right here and the 707 level around in this area. So throughout this whole area right here, just this area, there was a lot of warrants, and they need a lot of liquidity to get rid of those warrants, to exercise those warrants, and so they won't affect price action that much and push price action down. So what happens is between this area, I want to keep track of the volume and make sure that it covers all those warrants. So about 5 million, right? So this day right here, it ended up doing 22.2 million, more than enough. I didn't trade this area right here, okay? Because I knew that this whole area, they might be diluting, pushing, there was a lot of dilution on the filings, all those warrants and options to be exercised at those prices. But then when I saw that it was holding above this 625 level and it was consolidating, I was debating whether I should take a position in this area or just wait for it to break VWAP. VWAP is my red line. Now, as it rejected VWAP and I noticed that there wasn't a big reaction of a dump, then I started taking a position at 766 once it broke over VWAP. The reason why it's because if they had a chance to dilute their shares, it will be in this area. And after the volume, it more than covered about 5 times of that dilution. Also, the float is a micro float. It's very tiny. It has a good catalyst. So there's a lot of positive things um, around this level. I wouldn't have traded this level even if they paid me because it's very high risk. It could pop up and then break down even with good news. We've seen that happen many, many times. And you can see right here, it popped up and most likely they were diluting and it pushed price action down. You can see some really nice downticks right here. But in this area, after that consolidation, you really don't see any major um, pullbacks as this one right here. I mean, this one went from $9 all the way to $6. Major pullback. So I decided to take a position here on a lot of factors, and you can see what happened. It squeezed, got halted. Okay, I wasn't expecting this big of a move. I was literally just expecting the high of day test and most likely reject, but it got halted. It squeezed higher, got halted again, and I sold in this area. I sold way too soon, but I'm happy with that. I made a few points per share, and that was it. I focused mainly on high probability on covering all my factors and taking that position. So after that, you can see, and this is what happens when there's high volume on a really micro float. It gets halted and it's very volatile. So it did have some wide spreads, and that's why I didn't really want to trade it in this area. Then I drew a line right here from this pivot point area. You can see that it was highly respected right here. Okay, double bottom after hours, stayed above that level, and then the next day, this is where it trapped a lot of short sellers. Um, in the first day there really wasn't any shares available on a lot of brokers, so a lot of people weren't short in that, and that's another good factor that comes into play of going long. Now, right here, I think people rushed it. As soon as pre-market open, broke under this level, I think people were shorting it, and then broke above. Short sellers were underwater, and they were being stubborn. All of a sudden, volume really started coming in. Usually, volume comes in after 8 o'clock. Okay, a lot of brokers open up at 8 o'clock and then 8:30, and you can see right here, volume really started perking up. This is really where short sellers blew up their accounts, honestly. I mean, think about it. If you shorted from, $9 and then this thing went up to $19, you're underwater 10 points per share. Not a lot of people can stomach that. They either take a huge loss or they blow up their account if they're stubborn enough. Now, in this level right here, I had reserved shares and I was just waiting, just waiting. On this level right here, it it double topped. Okay, let me see if I can draw a line. It double topped right here, but I really wasn't. I didn't want to take a position right here. I ended up getting filled at 1660s. Very small position. I mean, we're talking about a few hundred shares. Very tiny position. Um, it was a bit too risky, and it perked up, got halted to a downside. I covered, and then I stopped trading it for the rest of the day. I just really stopped trading it. You can see right here, it broke under, started fading throughout the most part, and then right here, this is where I shorted it pretty heavily. Well, 2,000 shares. Um, you can see as soon as it broke that level, I decided to take a short position, and then I just held it throughout the whole day. Even though it came down, probably didn't catch the bottom, I held that spike and I was waiting to see if they were gonna do an offering. They didn't. Um, so I decided to cover right in this area right here. And that was it for me. But there's definitely a lot of things to look at, definitely a lot of factors on why you shouldn't be shorting on the first day. If micro float is running with a fresh catalyst with very little dilution, this is typically what happens. Creates a really, really big short squeeze, and this reminded me of AWX when AWX kept gapping up um, in pre-market and after hours. That's typically with when a lot of short sellers just give up. They're not willing to hold it overnight just because the bar rate is too high, the commissions is way too high to hold it overnight due to borrowing those shares. And it's just a lot of factors to look at, but I definitely create spreadsheets, especially if a stock is holding the first day and it's coming up to the second day, to be ready for the first red day or maybe weakness in order to tackle it for a short. But I think on the first day, there's definitely a lot of factors to look at. Do your homework, um, get efficient enough to where you can do this research within 10 minutes or so. So by looking up special words, shares outstanding, float, warrants, exercisable price, all those keywords you can type up here and it'll do the work for you. That's the great part about this. Um, but that's it. If you guys have any questions, feel free to send me a message. Be on voice chat. I'm on voice chat every single day, answering questions, going over charts, going over filings every single day. Make it a habit into doing your homework, understanding what you're trading in order to be ahead of the game. So, hope you guys enjoy the weekend, and I'll see you guys Monday.